let's move on to how to trade price levels like a pro. Now, there are many ways to find support and resistance levels or price levels of importance. Now, the market and professional traders refer to these as support and resistance. A lot of people, including myself, I don't get confused over support and resistance, but I don't even use the right words, because support is support when it's moving up and becomes resistance when it's moving down. All I know is it's a strategic price. If the price is coming down to that strategic price, something's going to happen. If the price is going up to that strategic price, something's going to happen. Now, there are lots of ways out there that we can find these price levels or support levels. Now, I only believe in one way, and that's called eyeballing. That's going back and looking at your charts and going back historically to see what price has been strategic as prices moved up and down through that area. That means looking at historic price action to identify areas where price has reacted and had a difficult time climbing through above or below. Now, let's not make this overly complicated. Let's take a look at one of my charts. Okay, we're looking at, when it pops up on your screen, my Euro US dollar 30-minute chart. This is my teaching chart. I use it in every class for something, whether I'm teaching MACD, whether I'm teaching price levels today, whether I'm teaching triangles. I teach on the Euro US dollar chart. Now, across this chart, you see lots of lines with colors. Well, the colors are unimportant to you. The colors are only important to me because they tell me something. Not because they're a secret code for somebody. I mark different levels of how important they are. And back when I was looking at levels 6 months ago and extended them forward, I was doing them in yellow. So when I see this price on my chart today, this line on my chart, I know how old it is. When I look at red lines, I know they came from a year ago and they've extended forward because I strategically change the lines I'm putting on the chart based on when I'm looking at them. Because the thing about price levels or support and resistance, let's stay with price levels, is that they come from historic areas and they are put on your chart moving forward. This chart, these lines, or were not put on the chart today. These lines were put on the chart 6 months ago and had projected forward from that 6 months. Okay, they are only important when price is moving in this area. So if price were to move up to here, these lines would have no importance. We'd be looking at other lines that I put on the chart also. Okay, so when price dips down to here, we would be looking at these levels. When price moves up to here, we would be looking, and there are lines drawn on my chart all the way back to God knows here. Let's see if I change my chart. Let's change it back to a one-day chart. Look at all of those lines. And they've all been pushed forward into eternity based on when they've had importance. So we can see that these lines here had importance here. The blue lines came from way back forward and are still moved forward. And we can still see how important they were to price levels. So right now we're looking at this chart all the way back to March of last year. Okay, so these lines have been on here a very, very long time. And once you draw the lines on, you never take them off your chart. You can add more, and you can have short-term price lines and long-term price levels. But the longer term that those prices have held and been strategically important in the past, the more important they are in the future. Now we can see these blue lines and these red lines were on the chart months and months and months and months and months ago. But look how important this blue level was to today, yesterday, a couple hours ago. Look how important this level was here. Look what happened when price came to this level here. Even though it went through it, it sat on that level for 5 candles. when price was then moving up, look at how important this price level has been. This price level has nothing to do with the last couple of days of trading. But when we were looking at price moving in that area, we knew that that price would be important, that price level. Look at this one. Okay. This one completely held in the full upward movement of price. So when this price was moving up, this line was already on the chart a long time ago. And we were looking for some type of reaction. Now, these price levels do not mean that price has to stop there. Doesn't mean that price needs to soar through there. Doesn't mean price has to bounce off of there. It's just a warning to you as a trader that these levels are strategically important and that you should expect something. Now, if I was in the market here, let me get these lines off the chart here. Okay. If I had entered the market here and was trading this upward movement, okay, where would I want to put my take profit point? Here, because I knew it would have, even if price went up, I knew it would have a difficult time getting through there. Okay. Look as it eased back down. Look at what happened here at this level. Then it eased right back down here to this blue. So if I had waited for it to bounce off of that and traded short, where would I want to get out of the market? Right here. These are price levels of importance. These levels also are one of the few things in the market that you do on a personal level by going back and looking at your charts and going back farther and farther and looking for when price, and your only thing you're concerned with is when price is, right now you're only concerned with the levels around where price is trading. Eventually you have levels throughout your whole chart because price will trade up, price will trade down, but you don't have to go back and draw 5,000 lines on your chart, but I'm going to show you how to do that. But then once we have these on our charts, there's a whole strategy we can employ to trade these price levels. But what makes you a better trader than the guy sitting across the room is the time and effort you put in to find these levels, how many levels you found, how well you define these, and the fact you actually go through this and put it on your charts and pull them forward. Like I said, mine are color coded. We also have major resistance, minor resistance, short-term resistance, long-term resistance. Okay, you can color them, set them up individually for you so that they talk to you. So I'm going to share with you a little presentation on eyeballing support and resistance, and then we're going to go back and talk about how we can trade these.
So let's start with what support and resistance is. I think when a lot of traders think of support and resistance, they think of pinpoint lines on a chart that try to predict where the price will turn on a dime. But it's more complex than that. Let's start with the basics. Support and resistance refers to the technical analysis of price areas where the price action will potentially pause and change direction in any given market. If there is a price area below the current price action that has the potential to stop the price falling further and change its direction, we call this support. If there is a price area above the current price action that has the potential to stop the price rising further and change its direction, we call this resistance. Price can and does break through these price areas all the time. Typically, when price breaks through a particular price area that has been identified as either support or resistance, it will become the opposite to what it was before. So if price is rising and it breaks through an area of resistance, that resistance area now becomes a support area for the price. And the same is true in reverse. If a price is falling and it breaks through an area of support, that support now becomes a resistance area for price. There are different types of support and resistance levels, and I like to split them up into two categories: static support and resistance and dynamic support and resistance. Static, as the name suggests, are support and resistance areas that don't move. They are identified by the specific price level that the historical price action has shown them to be at. This is the main type of support and resistance people know and refer to when they talk about it. Dynamic support and resistance is the opposite. It refers to support and resistance levels that move. They are not at a fixed price. I use two types of dynamic support and resistance areas as part of my trading strategy, which are daily pivots and moving averages, and these levels change regularly. Daily pivot levels are specific levels of support and resistance that change on a daily basis. So I will have a set of daily pivot levels plotted on my chart on the Monday, and then these levels will change on the Tuesday. Monday's pivot levels are now no longer of interest to me on Tuesday, as all the levels have changed. Moving average levels are dynamic as well, as they are constantly changing with the formation of every candlestick. Dynamic support and resistance levels, such as daily pivots and moving averages, usually plot themselves through indicators within a charting platform. So if you add the daily pivots and the moving averages to your chart, the levels will update as soon as they need to. Static support and resistance areas usually have to be identified and plotted manually. So let's look at how we do this. We can identify these price areas by looking at the historical price action on our charts. We are looking for price areas where the price has been heading in a particular direction and then has stopped and reversed in the other direction. Equally, we can spot an area of support or resistance if the price has been heading in a particular direction and has paused for a significant amount of time before breaking through the area and continuing in its original direction. Sadly, support and resistance areas aren't as clean in reality as demonstrated by these illustrations. So let's jump over to the charts and look for some real life examples. Okay, so here we have the daily chart of the FTSE 100, and as you can see, currently the price is up at the 7,300 level and has spent the last couple of months around the 7,000 level. Now, to demonstrate how to identify and plot support and resistance areas, I'm going to scroll back on the chart to the last time the price was in the same region as it is now. This way we can use the support and resistance areas we plot from the previous price action to see if they have any significant impact on this price action that's happened over the last few months. So I'm going to draw two red lines, one above this price action and one below, very quickly. There we are. Now we want to scroll back and find the last time that the price was between these two lines so we can use it to identify and plot the support and resistance areas for this price region. So if we scroll back, we find that the last time price was in this particular region was sort of December, January to August 2016. So in order to start plotting the support and resistance areas, we first need to identify where they are. And as I said in the video previously, we need to spot the points where price has had a significant reaction. And to do this, we want to find where price has either been heading in a particular direction, has stopped and reversed, like here, or where it has stalled for a significant amount of time before either breaking through a particular area or reversing. So this area here, for example. And to plot these areas, I'm going to take my circle tool and I'm just going to first pick out all the reactions that I can see on this particular region of price action. So as I said before, I'm just picking out all the reactions where price has either reversed or stalled, and I'm just highlighting them so I can see them more easily. Fantastic. Okay, and now to plot the areas, I'm going to take my line tool and I'm going to work my way down the chart until I come to a reaction point. So the first reaction point I come to is this one here. And I want to encapsulate this reaction with the two lines. So I want to take the highest point the reaction occurs, and I want to try and place my line at the lowest point where the reaction occurs. And then once I've done that, I can delete my circle. So here we have our first support and resistance area. And then all we're going to do is work our way down the chart, picking out these reaction points, their lowest and highest levels. Another one here. Another one here. This one has more than just a one reaction from it, which is fantastic as it gives this particular area a little bit more weight in future use. As we come down a bit further, we've got this one here. there. Actually, this one could probably come a little bit lower and encapsulate that reaction as well. And then we've got one down here to there, got another one here to there, and then we've got another one here to there, and then we've actually got another one here to there. And then we can delete our circles, as all of these reactions should now have been encapsulated in the areas that we've drawn. So that one has, yep, yes, 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 and yes. Now you may have spotted that there is a particular area here that doesn't have any support or resistance area within it. And it does look quite a large area to not have any sort of area in there at all. And all that will have happened is the particular price action that we're looking at here will not demonstrate where this particular area is. So if we scroll back further, here we are, we can see that the price does react within this particular area, but just not in the price action that we were looking at. So we can use this price action here to identify this support and resistance area. It's fantastic. We now have all our areas plotted. And to make these a little bit more visible for us, I'm going to colour them in with this rectangle tool. So I will speed this part up as it's quite boring to watch.
So as you can see, eyeballing, and this is what I call eyeballing, is not difficult. It's just a bit time consuming. But if you notice, there were areas where we said that look at this price hit many times, so it's a more important price. So all you had to do in your own mind is set a color for a more important price level and use that color to draw that particular line. In the final case, when we had to go back into historic prices because we couldn't find anything in that range, we could have put that as another color line. So you knew, because when they get pushed forward 6 months, a year from now, you don't remember where they come from, but then you'll have your color codes that will give you some type of cue. So if you knew that line was critically important, that price level was critically important way back when, then you should know that now. So this is only the beginning. This is not too complicated. It's just time consuming. But once you have all of these price levels on your charts, you never have to really draw them again. But now that we know the role of support and resistance, or price levels, or floors and ceilings, and why we can really call them zones, because these price levels or price zones are not really finite prices. They are price levels that we looked at, okay, that we saw from the past. We didn't calculate that 122.97 was the important level. Okay, we came up with an area or a zone. Okay. Now, that's because support and resistance are not a given line. If so, it would super easy for traders to know, and every trader on the planet would have an entry order. You know, we could just have a list, a computer list of every price. This is where you become the outstanding trader. Now, if you think of them more like zones that can be breached or pushed into, the trend may pull the price action back out of it, or maybe price action will succeed in breaking it for good. This is why we want to know, think of these as points, or think of these points as zones. Now, this support and resistance or price level zone strategy will enable you to trade exactly at the area price will reverse. Okay, so now we're going to talk about a strategy using these lines. Trading support and resistance lines are critical for every trader to implement into their system. Now, I'm going to guide you every step of the way. So follow along as we cover support and resistance trading. And you'll learn this strategy. You'll be able to identify these sweet spots and where price action happens. Our indicators for this strategy will be price action and its relationship to support and resistance. To be honest, this is, in my opinion, or our opinion, the best way to trade support and resistance. Now, so what exactly are the key areas? How to trade support and resistance levels? Before we explain the strategy, we're going to define support and resistance, which we just did. So let's go on with our strategy. Step one. The first step of our strategy is drawing these zones on our charts. We've gone into great detail learning how to put them. So now we have to isolate the ones that are important around our current price. So all we're concerned with is, say, at this point on the euro US dollar, be here, 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 and here. Okay, that's it. At this point, after you do this, it will resemble a support and resistance indicator, only you now have zones to take advantage of. Drawing zones on the chart is better done on a higher time frame so that you can examine the main reversal levels, and the more critical points on the chart at higher time frames show us a bigger picture. So in other words, if we were to take this chart and move it back to a 1 hour chart, we get a better picture of what is happening. Still the same lines, they haven't changed. They're still the same prices. And if we go back to now a 4 hour chart, we still have the same lines, just more and more because there's more price levels in here. But we still have our yellow, our blue above, our blue below, and our red below. Okay, but we have a better look at how price is moving. But for our type of trading, we want to make our decisions in a 30-minute chart. So when you are doing support and resistance trading, a line with multiple touches is far better off as it stood against the price and passes the test of many times, and it will continue to do so. Why? Because history always repeats itself, and it continues to happen time and time again on every chart you look at. So make sure you leave space between zones, as drawing many lines will confuse you and worsen your trading decision. This strategy could easily be compared to our red zone strategy that follows how to draw zones on your chart. Okay. When you look back after drawing zones, you will find that these lines withheld the price numerous times before and will continue to do so numerous times in the future. So step two. The second step is waiting for the price action to touch the zone. So what you can do is set up charts on 2 to 4 currencies and wait for your chance, as it may take some time for the price to reach the support and the support or the resistance levels. The reason we say 2 or 4 currencies is because that's a good number of pairs to be looking at and will not overwhelm you, because you have to wait. Once you have these set up on your charts, okay, you need to wait for price to move to one of those zones. So in other words, if we were waiting, we had this perfect trade right here. We would have had to wait for that to happen. Now it's already occurred and price is bouncing up. If we use this strategy, we would have seen this and we would have taken a long position and we would have been right in the money. Same thing here, but now there's absolutely nothing for you to do if you haven't entered the market, because you've got to wait for it to come near the support or the resistance level. So you could just sit there bored to death. So if you do this on 4 major currencies that are actually, and currencies that are not volatile, that are not volatile, but not having any price action day. There's some days of the week where there's nothing going on in the euro market. There's nothing going on in the calendar in the euro. It's a quiet day in the eurozone. It's the end of the trading day in the eurozone. You're not going to see much action at all. But on the other hand, as the U.S. markets wake up and there's economic data and everything, so you'll have more action trading. But now you're just going to sit tight on this, waiting for something, counting down the time. So if you're looking at 4 different charts that have good support and resistance zones, you're not bored silly. So basically, the higher time frame takes less time and attention than the smaller time frame. Alternatively, the smaller time frame gives more signals as the zones get hit more frequently. Like I said, our type of trading, we want to stay at the 30-minute zone. So if the price reverses, that will be good. As what we are expecting, we need a strong reversal candle through to assure us that the price is reversed and will not collapse back in. On the other hand, if it breaks that level, it may be breaking or fake breaking. We also should see a strong piercing candle that effortlessly breaks the support or resistance level. So again, let's go back to my chart. Okay. Here, okay, we saw that price level, and if you again say it's a zone, it's not a finite price, well, we saw it broken. Okay, we saw 3 little tiny indecision candles doing nothing, told us absolutely nothing. But then what we got was one bullish candle that told us to enter that market, that this was bouncing off of it. It wasn't a fake break, it was a fake break. And we would have entered the market here, and we would have already capitalized on that move. So we have to determine when price comes to the support or resistance zones or price level zones, is it a strong breakthrough? Is it a bounce off of? Is it a fake? So step 3 for the third step for this strategy is to wait for the candle which hits the zone to close. This will indicate a signal candle we are waiting for. Look at the candlestick pattern as you see. So in this case, we didn't get a break. It came down and touched here. The next candle came down and touched it again and then closed back above it. So is it a bullish or a bearish candle? Is it strong or weak? Is it big or small? Does it have long wicks or small wicks or no wicks at all? When we can identify the kind of candle, then you will be able to decide whether to sell short or buy long. Knowing the type of candle is crucial to identify if the entry is valid or not. So we also see a candle that formed afterwards to signal the end of the down movement and the beginning of the upward movement. So how do we know it's strong? What is the secret? Before we go any further, here are some important factors in determining a strong candle, because spotting that specific candle on zones makes the difference between winning trades and losing trades. Now, this is a strong bullish candle. What qualifies? A long body formed after a previous touched the level but could not break it. Entirely taken the 2 previous candles out. So this long blue candle, okay, took out the prior 2 candles and still moved up in the opposite direction while still hitting that zone. Now, you need a whole bunch of rules and regulations here, or you need a gut feeling. Okay. Again, here we have the red candle. We have two indecision candles. But then what do we get? We get a very, very strong candle that took out the previous candles and told us exactly what was going to happen. It was screaming to you. And if you didn't hear it screaming, then you need to go here see an ear doctor. So the example shows how a strong candle should look. As you can see, the strong candle overpowers the ones before. Then we go into step 4. The fourth step to this support and resistance strategy after you analyze your zones. The fourth step is identify where you will trade, where you will enter, and what are your criteria for entering and exiting. So your entry should be slightly above or below, depending on which way it's moving, the signal candle, which is the strong candle. This way, you are adding more confirmation to your trade to make sure you will price action towards the candle. So in this case, and this is a live market we're watching, this is your entry point. This is your strong candle. Your entry point is the close of that candle. Okay. Once that previous candle has moved above that close, which it should do it, I mean, it opened as a bullish candle, you would enter your trade. Easy, plain and simple. Where would you set your exit point? Here. Where would you put your stop loss? At the lowest low before it reversed and swung back up. So you have your entry, your exit, or your target, your entry, and your stop loss. What else do you need? The key is being able to look for and reading that reversal candle. Our stop loss should be placed on the other side of the zone and not too close to the level it gave to give it some space. As we said, it is a zone. Putting stop loss there makes sense because this is where the end of the trade. The price is unlikely to reverse after that point. So according to the rules of entry, you would enter, your take profit point, your stop loss point. So let's review real quickly. Support and resistance strategy will enable you to trade exactly at the area where price will reverse. Trading support and resistance level lines are critical for every trader to implement into their system. Our indicator for the strategy will be the price action and its relationship to the support and resistance or price level zones. So 1, draw them on our chart. 2 is waiting. 3 is wait for the candle. 4 is identify that candle. And 5 is your exit strategy. So that's a wrap. So now that we have learned from the support and resistance strategy how to draw the zones and how to trade them successfully, we also learned how to determine the direction the price will move to so we could have a better edge in our trading. Trading support and resistance and discovering support and resistance zones are pivotal to your trading success. So thank you very much for joining us today. I hope you learned a little. You can practice the strategy, make it your own, understand it, draw your colored lines on your charts, draw your zones, and practice with a demo account. Have a great day. And if you have any questions, go to www.alvexo.com and they'll be glad to answer them for you. Have a great day and a great weekend. Bye now.